Hey everyone, Brian here. I want you guys all to wave to Paul. Hi, Paul.
What's up, Ryan? How are you?
Good. We're waving because this is going to be the first podcast that we're going to attempt to put up on YouTube and video for those that are going to watch it that way. Hope you guys enjoy it. Paul is the founder of a company called the Blue Collar Advisors. And thankfully, Paul makes sure that when you guys make money, you get to keep it, right? So you provide outsourced CFO services and other financial stuff, and I'm sure a ton of other things. I can't wait to hear about it. So was that a fair assumption? Was that a fair assessment of you, Paul?
That is a fair assessment, Brian. Yes. So I offer outsourced CFO services to companies in the trades. Really, main focus is helping them create consistent positive cash flow. So, like you said, not only make money, but actually keep some of it at the end of the day.
And then not have to pay it for taxes? Oh, geez. Like I made, I always crack up going, there's 100,000 in the account. It must have made 100,000 in the account. It's like, no, 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 no. You're negative 200,000. How did you fund the loss? You're just borrowing money to pay Paul or, whatever. The other one is you have a big tax bill. You had a good year. And then all of a sudden you had a big tax bill going, oh, no. So tell me, how did you, so you, I saw you came, so tell us your story. You came from corporate. We all
I-
had we all served our time.
We did,
We all
yeah.
work for big dumb companies doing big dumb things. And we're going, what are we doing, right?
Yeah, we did. So growing up, I was around the trades pretty much my whole life. My dad was in the trades. He owned his own hardwood floor company. All the people he hung out with working on job sites, they all said, don't do what I'm doing. Go to school, get good grades, go to college, go work for a big company, get the benefits, 401k, all that kind of stuff. So that's what I did. 2000, I graduated college, 2007, moved to Chicago, sat in a cubicle working for a big bank. 2008 comes, I watched most of the people that I work with that were much older than me at the time lose their job, lose their livelihood, and really, everything that their whole lifestyle was propped up by this one job, this one company. And when that thing goes away, their lifestyle goes away. So long story short, I realized that this isn't as safe as everybody says it is. When you work for somebody else, you basically own your own business. You have one client. If that client fires you, you're out of business. So I left 2010. I moved to Raleigh. I've been in the Raleigh area since then. And since 2010, I've scaled and sold four different service-based businesses. Most recently, an electrical company that we scaled by about 500% in 3 years. I exited that early 2024. And since then, I was trying to figure out what do I do next, and I realized that I have a strong finance background. Went to school for it, worked for big banks, love spreadsheets, numbers, all that, and all the companies that we were able to successfully sell was because they were healthy financially. So
Really? You mean you're only going to sell? I mean, people, there's only value when the company actually makes a profit?
isn't that wild? Yeah.
What?
So
But there's so much opportunity, Paul. There's so much opportunity. There's some
exactly.
sarcasm there.
There, yes, lots of sarcasm. So a lot of times when people try to sell their business, they're like, "Don't worry about the past. There's, bright skies and all the great things ahead. Don't worry about the past." So, but yeah, so now that's what I do. So I help companies in the blue collar space, so mainly home service companies, plumbing, electrical, HVAC, landscaping, windows and doors, garage doors, those type of people. Really become their financial guide to get their business on track financially, keep it that way so that they have the clarity and the confidence and they actually have a plan to get to where they want to go. So a lot of times when we start our business, we have these grand plans, visions, dreams, what it's going to look like. And within a couple of weeks, we realize those are all out the window and we're in pure survival mode, fighting fires, trying to make payroll, grinding it out. And we never actually get to where we want to go and we forget about it really quickly. So that's what I do in a nutshell. And we use numbers to drive everything instead of gut feelings, emotion, and ego. A lot of business decisions get made on ego, get made on, emotions, or I think we should do this versus the numbers don't lie and the numbers will always tell us what the best move is. As long as we have good numbers and we know what they mean and then what we need to do to get to where we want to go.
Yep. And actually, so kind of I think your timing is fantastic. It's as we're recording this, it's the end of the fiscal year 2024. So if you haven't already started talking to your CPA about pre-year tax planning, you need to do that, or your advisor, because the Section 179 stuff, if it's still around, I think it's this year, it's only 80%, maybe it's less. You may be buying pieces of equipment to have some tax benefits, but you have to know your numbers. And what's interesting is that all the people have been on the expert series. really have been marketers mostly, or mindset people or whatever. But this is our first time we've had a chance to dive into the numbers and how important it is. As a marketing guy at my core, right, I built and sold a small tech business and have been around other exits, and friends have built and sold businesses. I built this business as a lifestyle business, not because I think it's something. I built it because I can have a remote, my team's remote, I can still contribute, I still need to work, I still have bills to pay like everybody else. Like I've mentioned before, we own a home service business. My wife and I have an interior design business, and you got to know your numbers in that business, because if you make a mistake on a $30,000 piece of furniture, you could have a bad day. Or if they don't pay you for it, right? So there's lots of tips and tricks that you can do for that stuff, but you got to know your numbers, right? So what are some of the struggles? What are I always talk about customer acquisition is a struggle, right? But from your perspective, what are really the top one or two struggles when you first get engaged with someone, the reason why they come to you, right?
Yeah, I mean, it's a great question, Brian. So really, for one of two reasons. One, they're in a tough cash flow position. They're doing a lot of revenue, and at some point in their journey, they thought revenue would solve their cash flow issue. But if you don't solve the foundational problems, more revenue is just going to make your problem actually bigger, more stressful, because it's just a bigger machine that's operating inefficiently and on the verge of going out. So that's one thing. And the other one is, people, you get to a point in business where it's like, wow, this thing took off more than I ever thought it would. Originally, most people start their trade company because they were sick and tired of working for somebody else. They wanted to go do their own thing, whether it was they didn't want to have a boss, they thought they could do it better, thought they could do it cheaper, whatever their reason was. Then it turns into a business. Then you got to start making financial decisions. And 99% of people in the trades, they didn't start their business because they love numbers. They started because they love the trade. They're really good at it. They're skilled at it. They can teach other people how to do it. But at some point, we've got to start having financial decisions being made of how do we scale? When do we do this? How do we put this person in place? How do we fund this? And all the different moving parts of a business. It all, at the end of the day, all comes down to numbers. So, some of the things they could be feeling is, we're sweating payroll. We're up at night stressed.
Yeah.
We're
That's what I was gonna say. Like, just because you have receivables of a couple $100,000 doesn't mean that your team doesn't need to get paid.
correct. Yeah. And, usually there's never enough money in the bank, or there's just lack of clarity and confidence of like, are we actually doing this right? Where do our numbers need to be? Are we pricing things right? So it's a lot of more of like the unknown. And when I talked to a lot of people originally, like, well, I got a bookkeeper and I got a CPA, and you mentioned the CPA, bookkeepers and CPAs do stuff that's in the past. They do
Yeah, they're
compliance work.
historians. Yeah, I love that term. They are very much historians.
So they're documenting everything in the past. A bookkeeper is just going to take all the transactions, put them in buckets, and a CPA is going to look at all of your stuff that your bookkeeper did and say, okay, this is what you owe in taxes, unless you do X, Y, and Z, and where a lot of business owners get stuck is they assume that's all that there is. It's like, well, my bookkeeper handles that. Well, my CPA handles that.
No.
But we still need someone guiding us forward. So I kind of equate it to bookkeeper, CPAs, they're in the rear view mirror. CFO is looking forward of, hey, where's the destination? And then we're going to be the GPS of how do we get there? What roadblocks are ahead? When you have a CFO, they're going to do the forecasting for you, just like a Google Maps does. It's like, oh, there's a wreck 30 miles ahead. You can detour now and avoid it. Versus a lot of business owners, they don't have that guidance. So they run into it and then it's too late to actually make a change. It's like, well, now we're stuck in traffic. Versus a CFO can be like, hey, if you don't do anything, if you don't change something in the next 4 months, in 4 months, you're going to run into a cash flow issue. So that's really what I focus on, and leveraging my experience of owning companies in the trades, running company in the trades, and then obviously my financial background allows us to get some pretty good results.
So I'm going to unpack something that's really important. He used the terms, I think, at least 3 times for listeners. He used the term map, right? So and I'm going to tell you why I like the term map. I love the point of the term map is because you have to know where you are to figure out where you're going to go, right? A lot of consultants will talk about a business plan, this and the other thing, and it's all about projections. But I think it was a Tony Robbins thing. He said you have to have a business map because you got to know where the hell you're at. Because if you don't know where you're at, how are you going to figure out where you got to go, right? Because most people figure out how they're going to get there before they're going to figure out how they're going to go. So
for sure,
I just think it's a really interesting analogy. And I don't, because again, you have to have that scorecard, right? So outside of So outside of like a P&L, right? What are some other scorecards or measurements or metrics that kind of help people understand the health of their business? And maybe the fact that they don't exist is a measure of the health.
Yes, and a lot of it is just we as like I'm a business owner just like everybody else. I had to learn it the same way. Obviously, I learned some of it in school, some of it working, but a lot of times we might have all the data there. We just don't know what we're looking at. We don't know what to do with it. So everyone gets a P&L. They usually look at two things. They look at the top and they look at the bottom and they ignore everything in between.
And
And
that's
if
what
the
the good
bottom's
stuff in the middle. Yeah.
yeah, and if the bottom's not where they want it to be, they're like, well, let's just fix the top so that way the bottom gets better. But we really got to fix everything in between there. So I try to keep it super simple for my clients. My goal is to empower them and to really educate them so they can take ownership of their numbers for really usually the first time ever. So looking at the key drivers of profit, and that's only half of the cash flow equation. So we won't get too far into the weeds, but when I look at a lot of companies' books, they're not even set up properly to deliver the data they need to make an educated decision on what's the next step to get to where we want to go. So we want to know what our gross profit is. To keep it super simple, gross profit is the revenue that comes in minus all the expenses it took to deliver that revenue. So the main two things are labor and material. There's also some ancillary things in there if you're pulling permits and different things like that. Once we know what our gross profit is, then we can say, are we priced right? Is our labor efficient? What do we do in materials? All those type of things. So most companies in the trades, in the home service space, we need to be at a 50 to 60% gross profit. So most companies that I work with, a lot of times we don't know if they're there because their books aren't set up properly. Because a lot of times the bookkeeper is just setting the, like a bookkeeper works really well when they're getting really good direction, but a lot of times a business owner doesn't know
Exactly.
what they don't know what they don't know, so they don't really know how to guide the bookkeeper. So that's one of the biggest things. The other thing that drives, kind of below cost of goods sold is then our marketing spend. And what drives marketing spend? Our average ticket, how many jobs are we doing? What's our closing rate? What's our call booking rate? Because a lot of times companies think they need more leads, but they actually don't need more leads. They need to get more out of the leads they're getting. And it means there's something broke in the sales process or the phone process. So that's a big one. Another thing is overhead. So obviously, what bills do we have to pay no matter what? And then the last one that I look at from a profitability standpoint is office payroll. So how much money do we have to commit to in salaries in the office to support all of the people out in the field? And a lot of times that's out of whack because we get to the point in growing. And I think Vern Harnish calls it like the black hole, basically, where most businesses go to die is between 1 and 5 million because you're at a point where you got to bring somebody on before they're going to be at 100% capacity. So
Right.
you're like, I need another person to answer the phone. If that person starts tomorrow and the person that they're going to start helping was at, say, 110% capacity, they're overwhelmed. Now we bring on another person and now they're both at 55%. So how long can we operate with those people at 55%, or how long can we operate until we get to 100% by not impacting our cash flow? So those are just a few things that I look from a profitability standpoint to, build out a scorecard that our clients get once a month so they know exactly where they're at financially.
And that's actually key, right? And a lot of times we make that as entrepreneurs, we just make that decision based upon a gut feeling, and that's not right, right? So, I mean, I have a staff. I mean, I have 15, 16, I think I have 16 folks on the team. And so every time we have this conversation with, okay, what does our sales forecast look like? What is our attainment? That's the number we use, the attainment, right? So contribution margin is a big number that we use. Every business is different. And then as long as we're creating contribution margin exceeds a certain percentage and we know where they're going to go, I'm willing to make that investment. But if we can't answer that question, we're not willing to make that investment. But again, this is my third go around doing this stuff. We've got a good team in place, and that doesn't happen. It's not an accident. So you need, and by the way, I think I've made more mistakes than not. And not having someone on the team to help out. In fact, 2 years ago, our accountant says, you should have caught a hold of me earlier in the year because you're going to owe a lot in taxes. I'm like, I know, I've been trying to get on your calendar since June. We knew we were having a good year because we had cost controls, we had project accounting, we had all that stuff that you said we should go do. We went and did it. And now we're like, okay, now what? Well, I'm busy now. You should have told me sooner. I'm like, it's 6 months before the end of the year. How much sooner as it is? And he responded in November, and I'm like, we're long gone. We've already been interviewing other people. And finding other stuff. So finding that partner is hard, right? And then for your point of view, I get the fractional thing. So what's some pushback? So if people think that because you clearly you're doing a clear delineation, it's not a CPA, that's a tax thing. It's not bookkeeping. That's I'm going to guess it's a transactional thing, keeping an eye on the transactions. So, how do you like identify like where you fit? Is it a revenue number? Is it not a revenue number? Is it too soon? I'm doing $500,000 or 300,000. I've got 4 employees and 2 trucks kind of stuff. At what point do I, what point should I get? I know it's earlier is better, but kind of where's your average? I heard about the black hole, the 1 to 5 million, but what about the guys in front of that? Because a lot of people that are listening to this are the ones that are like, hey, I'm trying to grow. I'm trying to get to 1 million so I can net 100,000, 150,000. We think that's a lot of people who are listeners. So,
right. Yeah. So, I mean, if you're under if you're under 1 million, a lot of times, well, kind of backing up, a lot of people think CFO, I don't need a CFO. That's for like big Fortune 500 companies. And they're right. Like you don't need a full-time CFO. You probably don't need a full-time CFO till you're doing 20 or $30 million in revenue, and you need somebody in the office 40 hours a week, keeping track of everything because there's so many more moving parts and so many more transactions and people
right.
and all that kind of stuff. So, I look at it as if you're good at what you do, no matter what it is, whether you're a marketer, whether you're a technician, you're a plumber, you're an electrician, whatever it is, you can get to $1 million just by brute force. You can push that rock up the hill and get to $1 million just by doing it. Because when a CFO comes to play, like I need to be able to have the owner's time in order to then implement the changes that we need to change in order to get to the next step. Usually when you're under 1 million, you're still out in the field grinding it out. You probably have an apprentice. You probably have somebody answering the phone, but like you're still the one doing the quotes. You're still on a lot of job sites. And it just, in my opinion, it really wouldn't be worth your time or money, especially your money, because you don't have the time to dedicate to working with a CFO. Because then when we work together, we're going to say, Bryan, your cost of goods sold is out of line. And now we got to dive into it and say we determine it's our labor rate. Okay, our labor rate's out of line. Now what do we need to do? Well, now we got to put in performance pay. Okay, well, how do we do that? So we walk through that. But now then you have to be the one to go execute. But if you're on the field 8 to 5, you're not gonna be able to execute it. You're not gonna be able to do that with your team. And your team's probably kind of small anyway. So I can work with people under 1 million. My number one job is to make sure they get a return on every dollar that leaves their company. And a lot of times they don't get a return on a fractional CFO when they're under $1 million in revenue because they don't have the time or bandwidth to go implement what we need to implement. So normally I'll start working with people when they're around $1 million up to about 10 or $15 million in revenue. Once they get past that point, like I said, you probably need somebody in-house doing it. But a fractional basis works really well because you're then without it, like you're mentioning black hole, without it, it's just a lot harder.
Oh yeah, for sure.
Because you're trying to do too many things. So my job is to take the financial burden off of them. I'm going to keep track of the numbers so you can then focus on what you're good at, training your people, building teams, building the culture, organization, all the other stuff that you have to do in person.
Yeah, I don't know. So I'm getting to be the master interviewer. So we're gonna unpack a couple things you said. Again, another couple awesome takeaways. The fractional services. Now I come from a sales background, and the idea of a fractional salesperson, they call them chief revenue officers, all kinds of stuff now. That's been around for a long time. Been around for at least 20 or more years, right? But the term we didn't call them fractionals. We just called them part-time sales VPs or consultants or business generation, whatever you call them. But I think over the last 10 years, more than ever, the fractional CFO space, and I think since COVID, because I think around the time when COVID happened, I saw an explosion of like I had a fractional COO for 2.5 years. Well, guess what? Paul and I were talking pre-call. Like I was able to do all the stuff I needed to do because I didn't know how to do it. I needed help. We unpacked all the stuff I couldn't do, and he implemented it. And now we're able to implement it myself. So guess what? He's on the shelf for 3 to 6 months until we break it again. Right. I have friends that are chief fractional marketing people because that's what agencies do. They're experts in their thing. You don't need them full time, and you will when you're 10, $20 million. But when you're 1 to 5 or getting to 1, you don't need them. So so don't be afraid. And actually don't be afraid to talk to people. There are fractional CFO groups on LinkedIn and on Facebook. You can ask great questions and great stuff. Paul and I are in a group together. I think that's how I found you. I think I found you on LinkedIn, but I see you commenting in some of the same groups we're in. So the other thing is like you don't have the time. So over Paul's shoulder, and I guess it's his right shoulder as I'm looking at him, there's a book called Buy Back Your Time. I don't think there's an episode that I've done. We don't talk about a book. Dan Martell's Buy Back Your Time is a really, I think, a very interesting and a very practical way to think about how do you replace yourself at every level, right? Because if you're making 100,000, you can't spend 100,000 to replace yourself, but you could spend 10,000 or 20,000 and start that journey. And he does a really good job of, he does a really, I think, a good relatable job of how he did it. And he does it. I kind of liked it because he's a tech guy and he talks about it in tech, but it applies to every industry. It doesn't matter. It doesn't matter.
Yeah, I mean, it's so true. And if probably my most favorite thing about that book is that it's like very actionable. So a lot of books are like more theory of like, hey, buy back your time and go do this, and you can work 4 hours a week. And but like his is like first you do this, and then once the numbers say this, then you do this step, and then
Right.
once the numbers say this, you keep progressing through. So it's a very actionable book, and that's why I have it up there. It's just like, you know, like I said, there's a lot of books that are more theory, but that's for me being a systems process numbers person. It's like do A, and then once A is done, do B. So it's not like, hey, go replace yourself tomorrow. It's no, like how much time do you have? How much is that time worth? What's, you know, do an analysis of all the things you do and you shouldn't be doing, and just kind of work your way through it. So eventually, you know, you are the visionary, the leader of the organization, but it takes time, you know. And he has like, he kind of walks you through different levels as well. It's like once you're at 300, you can get to 300,000 or 350,000, whatever the number is, solo. Like you don't need anybody. Then you can kind of get to 1 million if you like bring on a couple people to do a little bit of stuff. But then if you really want to build an organization, then we've really got to take a lot of things off your plate. And that's really my goal as a fractional CFO, is just like, hey, I know you're worried about this. You spend a little bit of time on this, but it takes up a lot of time in your brain and a lot of mental energy because you're kind of worried about it, not confident about it, don't have clarity around it. And it'd be nice if someone else just did that for you. So then you can start to focus on, you know, your area of, you know, zone of genius that one of the other books mentions, where that's what you should be doing, you know, and spend your time more doing that.
The Working Genius, Pat Lencioni. I'm completely obsessed of the 6 types of working genius. I think someone else coined working genius around the same time that Pat did. I'm completely obsessed with the working genius. I've had my entire team do assessments. My family has done assessments, and I will tell you, Paul. I'm going to tell you a secret. No one's listening. I don't like I don't like the finances. I just want to see the big numbers. I want, now obviously if you can't fix the top, you'll never fix the bottom. But you can fix more. It's easier to fix. It's easier to add to the top if the bottom makes sense, right? That's my take on it, right? Because if you're not making any, I agree with you. I worked with a client when I was doing some other stuff about 10 years ago, and they were like, you know, this is great. We have all this opportunity. I'm like, you put $12,000 to the bottom line on $4 million in sales. What are you doing? And you have all this infrastructure, all this risk, all this cost. Like, just put in a CD, and you'll get a 10x return on your investment than is compared to this, because you've got 100 people and one division that's doing 3 million whatever a quarter, $12 million a year, and you're putting $10,000 to the bottom line. That's like insane. So it is just it's just a crazy thing. So if you haven't read the Working Genius book, it's things you love, things you love and are passionate about and enjoy and get joy from, things that you things that you're they use a different term, things that you do, and things that you have to do because you're competent at. That's the word he uses, competent. And there are things that frustrate you, right? For me, finance frustrated me because I was like, I just want the numbers. And so it took me 3 years to go down that journey of what did my numbers look like. And it was no accident that as the operation got more organized, the finances got more organized because the operation was more organized. And then the profits, I mean, dude, it works. Like I'm actually looking at acquiring businesses. You asked me that 3 years ago, I would have never been like, what? Well, I can now because I can go to the bank and show them numbers like, hey, right? Or I could, you know, find other ways to finance it. So, and I might even sell, who knows? But it's you can't do that unless you have got good numbers. So.
For sure. Yeah. And then, and the numbers don't lie. So I think that's the biggest thing is a lot of times we as humans, we're always going to justify something about those numbers. We're like, well, you don't understand, Bryan, my business is different, or that was just a one-off thing. And it's always like kicking the can down the road, making an excuse, you know. And when we can just face it of like, okay, these numbers don't lie. What's broken? Let's go and fix it. You're going to have a lot less regrets in the future. You're going to make a lot less excuses. You know, unfortunately, most business owners, they simply run their business based on their checking account. So any decision they make, they look at the checking account and be like, all right, yep, I think we can go ahead and do this. We can swing this. But they're not, you know, they don't have any guidance behind that. They're not even looking at their balance sheet. That's a whole nother aspect of like what's going on in the balance sheet. And when we can get super clear on the financial health of the business and how it's operating, what's getting in the way, what are the opportunities, makes it very easy to use the numbers instead of emotions. It's just kind of getting over that first barrier of, you know, it's okay not to be doing as well as you thought you were, but we got to get the ego out of the way. We got to get the emotions out of the way and just let the numbers dictate, you know, what's actually going on and what we are going to do in the business.
Yeah, that's and that's actually one thing. So and I'll mention this for everybody, right? My business is no different than everyone else's. My business is not different. You know, we had a couple slow months. That happens. We knew it was, but I knew it was coming. I think that's the difference, is that I knew our Q3 was going to be light. Well, guess what? Our Q4 is historically stronger than our Q3. Just this year's Q3 was, you know, we had a customer that we readjusted. They weren't really profitable. We sent them down the road. But nonetheless, we knew that. So again, it's, you know, you gotta forget, if you're hearing a theme to this, if you're not working with Paul or someone like Paul, you need to, right? And I want to share with you a resource. So Paul has been super kind. He's got a resource. And it's, if I'm saying this right, I'll put the link in the show notes as well as a link on your, so you can grab it on your phones for later. It's called the bluecollaradvisors.com/price. So Paul, why don't you explain it? It's a price calculator. They kind of walk through it. So just give them the highlight, of what they can expect from you by going through that, and what they're going to get out of it.
Yeah. So what I really realize is that most businesses, they don't actually have a process or a formula or a reason for the prices they charge. They just kind of like,
What
well,
everyone else charges, we can do.
yeah, they'll
I'm putting my
call
phone
around, see what other people
because I'm
charge.
put in the air going, yeah, that's about right. That feels good.
Yeah. And they just, there really isn't any methodology behind it. Or it's like, when I started, I charged $100 an hour. Now that I brought someone on, I'm going to charge $150 an hour or whatever it might be. And when you follow the flow of money into your company, the very first step of this money is the pricing. So if your pricing is wrong, your entire financial model is irrelevant and it's not sustainable. So what this goes through makes it super simple. It also has all the formulas locked, so you can't mess it up. But you basically just put in all the inputs that go into pricing your services. And it's going to take into account the labor, the efficiency rate, you know, PTO, health insurance, all the things that are on the labor side. It's going to take into account other things, which is called burden of things we got to recover when we're charging for labor. It's also going to take into account if you have any material or permits or anything like that. Again, it's mainly for the blue collar world. But when you can get your pricing right, and what I have found is when you can get your team on board and have transparency of this is why we charge what we charge and actually have a reason behind it, it makes it a lot easier to sell it as well. So a lot of people, you know, they're going to say there's no way a plumber can charge $350 an hour. But if you break it down why it's $350 an hour, that's not all going to the plumber. It's going to be able to be a business that can deliver on the promise that the company's saying it can do. We're going to show up on time. We're going to show up the same day. Someone's going to answer the phone. We're going to take a credit card. We're going to show up in a fully stocked van. We're going to have, you know, people that are doing this for a career, so they're the best at what they do, and we take care of our people, so we give them benefits. All these other things that go into delivering on your promises, not only to your customers but to your people. It all starts with price. So that's why I built that, just so that way anybody out there can just, again, take your emotion out of it, take your ego out of it, and just put in the numbers, and it'll tell you exactly what you need to charge, either for a project or an hourly basis or whatever it is, you know, that you're looking to try and figure out.
That's awesome. Well, hey, you know what? I think that's a good break point. We have been kind of hammering the fact that you got to know your numbers, and Paul's sharing an amazing resource for every listener. So hopefully you guys take advantage of that. Paul, I hope you get pummeled with traffic for the millions of listeners we have here. But nonetheless, it's a good resource. I just downloaded myself. I haven't run through it yet, so I'll see how it plays with our team and how it's different. I guarantee you, Paul, there's something on there that you thought of that I haven't. But that's good, right? That's the only way we learn, by stretching and poking and prodding and getting new things. So Paul, thank you much. Thank you so much for sharing some time with our audience today. And you have an amazing day.
Awesome, Brian. Thanks so much for the opportunity.